Hello everyone. This is the pre-market report video for today, February 28th in the Indian stock market in terms of Nifty and Bank Nifty. Just before starting the video, please pardon my voice since I'm not feeling good at present. Anyway, first quickly let's see what happened on Indian market yesterday. Nifty opened a gap down of 30 points and quickly it drops another 100 points to the day's low of near 17,300. Broke the 200-day simple moving average. Then it took the support and again drops near 17,300 and then took the support there and closed above 200-day moving average and moved near 17,400. Regarding Bank Nifty, it opened marginal gap down but quickly recovers those. Then after 11 am, it moved over 300 points positive and closed near 400 points positive. Again yesterday, it's only banks positive, all other sectors literally crashed. Metal and IT down over 2%, followed by auto over 1.5%. There were various reasons for various sectors fall. IT fell because of high interest rate fear in US due to the high PC inflation, which we already discussed in yesterday's pre-market video. Auto fell due to two reasons. One, Bajaj Auto cuts its export production forecast next month by over 20%. It's obvious if Bajaj Auto's export is in trouble means then Hero and TVS Motor as well. So all the two-wheeler stocks got the huge pressure. Additionally, yesterday, our Commerce Minister Piyush Goyal accused Hyundai directly and requested all the automobile companies to buy component locally despite if the price is higher compared to import. And those were the reasons why auto stocks were severely under pressure. Above all, as I said in my last pre-market video, Indian Q3 FY 2023 GDP data, which is due today in the aftermarket hours, expects to come as very low of 4.6%. And I think that's the reason the whole market itself very negative. Some might say it's due to Adani's, but honestly, I don't believe it. Even the weightage factor of Adani stocks in Nifty was very low. Yesterday, Adani Enterprise lost over 9% and that 9% fall only contributed to 8 points on the negative side in Nifty. Anyway, again, FII net sold shares worth approximately 2020 crore rupees and DII net bought shares worth approximately 2230 crore rupees. The overall advance decline ratio was 1:4, which means for every one stock advance, 4 stocks declined. That much worse yesterday the market was. Then after the Indian market hours, all 4 European major index traded positive and closed positive since UK was able to close the Brexit deal in Northern Ireland. At present, Brexit is costing UK over 4% GDP annually. This trade deal won't tilt the gauge but will trim the loss. And this new deal made the British pound and euro relatively stronger against the US dollar. Thus, it reduced the dollar index. One of the biggest Friday's worry, which I didn't mention in yesterday's pre-market video, was the sudden increase in dollar index to near 106. And this deal made the dollar index drop to near 104.5. This made all 3 major index in US market to open positive, but in the end, it trimmed its gain. To be honest, last night in US, there was not any major news. Because of this no news and positive European macro made the US market positive. Also, please note, before yesterday, in the last 7 days, US market closed 6 days negative. So, some short covering and tech stock bargain hunting also helped. This also decreases the 10-year Treasury bond yield from 3.96% to 3.91%. Regarding tech stock, most of them except Facebook all closed positive. Tesla increased over 5% as it starts the production in Germany before its actual scheduled time. As a overall, last night, Dow Jones increased by 0.22%, S&P 500 up by 0.31% and Nasdaq was up by 0.63%. Last night, US VIX decreased by over 3% to near 21. Then in case of oil, it's roughly same as last Friday. At the time of this video, WTI crude oil is trading near $76 per barrel and Brent crude oil is trading near $82 per barrel. Coming to Indian ADR, it's mixed. IT stocks dropped around 0.6 to 1%, whereas banks ADR increased. ICICI Bank over 1% and HDFC Bank increased around 0.3%. In terms of SGX Nifty at 3 am Indian Standard Time, it closed at 17,487 level, which means it's kind of indicating flat to negative 20 points gap down opening. As a summary, US market closed positive, yesterday's Nifty indicating flat opening, and banks looks turned around after they consistently posted good loan and deposit growth. But the problem will be IT. I mean, even Indian IT ideas were down, and thus we may expect some more weakness in IT stocks. Just for cautiousness, based on stocks open interest, I can see the short build up on Escorts, Jindal Steel, and obvious Adani Enterprise. Then about the things to look out, during our market hours in the afternoon, France preliminary February month inflation and GDP is due to release. Then in the aftermarket hours, India's GDP data, fiscal deficit and infrastructure output, all important Indian macros will be releasing. Regarding US, consumer confidence data and house price index are the some items today we have to keep an eye on it. Coming to technical, at present as we all know that Nifty forms 8 consecutive bearish candle and closed negative for the 7th consecutive day. All that we already know. But now if we see the yesterday candle alone, it forms a hammer candle. For those who don't know, if the same candle forms during the price advance means, then it is called as hanging man candlestick. If it forms after the price decline means, then it is called as hammer. So here now what this candle was telling is there was a strong selling pressure initially, but by the time of close, buyers regained the control. This kind of signaling the price was bottomed out and possible upward movement on the following day. Just one thing here, yesterday Nifty breaks the 200-day simple moving average, then regains some. So today if Nifty closed below 70,350, then it will drag further down to 70,200 to 70,100 zone. While if it moves on the higher side, then 70,550 to 70,600 will be the immediate hurdle. Then about Bank Nifty, again it took the support at 200-day exponential moving average and climbed nearly 400 points to 40,307, and thus it forms a bullish engulfing candle which is a proper bullish reversal pattern. Now if it holds above 40,250 levels, then there is a high chance it will move up towards 40,500 to 40,750 levels. If not, then on the downside it will drop to 39,800 to 39,600 levels. Coming to moving average and technical indicator summary, for Nifty on the daily chart, there was no change and the same for last 5 trading sessions. At present, it's just only about 200-day simple moving average and most of the technical indicators are indicating sell signal. So as a summary, it's a strong sell signal. In case of Bank Nifty, because of the positive yesterday, in addition to 200-day simple moving average, it passes above the 5-day simple and 200-day exponential moving average. So as a summary, it improves from strong sell to just a sell signal. However, regarding technical indicator summary, it's still the strong sell signal. From options change in open interest, there was some put options unwind and some call options added between 17,400 to 17,600 and very small quantity of new put options added at below 17,400. It's kind of clearly indicating that traders are not sure and hesitant to take any new positions. Then regarding overall options open interest data, 17,600 got the maximum call options and 17,000 got the maximum nearby put options followed by 17,200. So 17,600 is the immediate resistance and 17,200 is the support to look out for. Then coming to Bank Nifty, based on change in open interest, significant call options unwinding took place between 39,800 and 40,200 and huge number of new put options added at below 40,200. And based on overall open interest data as well, huge short straddle were present at 40,000 and also some in 40,100 and 40,200. Then the maximum call option open interest without significant put options is at 41,000. Hence 41,000 is the strong resistance to break. And then the maximum put option open interest without significant call option is at 39,500. Thus 39,500 becomes the support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.